Hey everyone, welcome back to Corporate Decoder, the place where we, decode corporate filings. Today we're diving into Coupang's latest report, and let me tell you, it's less about rocket science and more about maybe some slightly bumpy landings. It's a mixed bag of profits, some concerning risks, and a peek into their Farfetch fashion adventure. So what's the story? Coupang, the South Korean e-commerce giant that wants to be your everything store, just dropped its report for the first 3 months of this year. Overall, the report shows some improvements. They managed to turn a profit, but are facing various economic problems, and some problems from their acquisition of Farfetch. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for people to discuss these filings. A quick glance, as of the end of April, they had about 1.6 billion shares of Class A common stock and just under 158 million shares of Class B common stock outstanding. This is important if we need to value the company later. Alright, let's get into those financials. The numbers tell a story, so we need to do a Warren Buffett style analysis and try to see what those numbers imply. Here's the main course: net retail sales, $88 billion, up from $5.895 billion. That's an increase, but not a huge one. It's about a 3% jump. Net other revenue, which includes things like their marketplace and advertising, that's where we see some fireworks. That jumped almost 50% to $1.820 billion. So Coupang is making more money from services around their core retail business. Operating income is an important indicator of a company's profitability. From its core operations, it came in at $154 million, way up from $40 million. So Coupang's making more money from its actual business. Here's the real kicker. Net income, Coupang's profit, hit $114 million compared to a loss of $24 million last year. The company went from losing money to making money. And earnings per share also turned positive. Last year it was 0 and now it's 6 cents per share. That said, this is basic accounting and we don't need to dive too deep. Moving on, cash and cash equivalents, their easily accessible money, is up to $6.1113 billion from $5.879 billion from $5.879 billion. So they have more cash on hand. Now, a quick look at the other side of the balance sheet: accounts payable, what Coupang owes to its suppliers. That's also up a bit to $5.72 billion. Net cash from operating activities, the cash a business brings in from its operations, a leading indicator of business success, also had a notable increase of more than 50% from 200 million to 350% from 200 million to 354 million. One area to watch: the developing offering segment, which has the company's newer ventures and includes Farfetch. It's still losing money, reporting negative $168 million in adjusted EBITDA, though that's a slight improvement from last year's improvement from last year's $18.6 million loss. So they are still burning cash there. The report mentions a decrease in their effective tax rate. This is tax speak. But what happened is that one of the biggest reasons for it were losses by their acquired business Farfetch. One key metric for Coupang is the number of active customers. They're up 9% to 23.4 million. So they're getting more people to shop on their platform. Let's look at some extra details and things we missed. Coupang's board authorized a stock repurchase program for up to $1 billion. A buyback is when the company spends cash to buy back its own shares, to increase the value of its shares and provide extra value to their shareholders. Coupang is saying that they believe the company is undervalued. Let's see what they did with their debt. This section goes deep into legal wordings that really translate to this. Restructuring and refinancing the debts of Farfetch Tardier. While the terms are too legal to understand, all we need to know is the implications of the deal. There's a class action lawsuit from investors claiming misleading statements during Coupang's IPO. They claim Coupang's registration documents had inaccurate data. Multiple class action lawsuit will certainly cost Coupang millions in legal fees at the very least. And they are also dealing with Korean regulators on various investigations. The worst penalty under the recent indictment is a fine of $200,000, although they face more regulatory headaches. Regulators and lawsuits means the business environment is tougher, increasing business overhead and generally making the company less efficient. Coupang is buying out the remaining part of the investment firm Green Oaks Capital in one of their Farfetch related entities. One of Coupang's board members is a managing partner in that firm, so these kind of transactions are always interesting. This might be a conflict of interest problem. Now, the executives are claiming that their financial controls are effective, except that there was an issue with the new guard portion of the recently acquired Farfetch. They have made a determination that it does not have material effect. Whether or not they are really is up for debate. So what's the big picture here? Coupang's core business seems to be doing well. They're making money, getting more customers. However, the Farfetch acquisition adds complexity and raises questions. Now, my take. Coupang is showing signs of becoming a real money-making machine in its main business. The strong growth in other revenue suggests they are getting good at expanding their services and offers. However, Farfetch is a big question mark. The restructuring, the legal mess, and the related party transaction raise concerns. The risks here are regulatory challenges, especially in Korea, and the successful integration and turnaround of Farfetch. They claim their financial controls are now effective, but there were some issues with a recent acquisition, and it could be more to the story than we see. Alright, that's a breakdown of Coupang's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.